Mortgage Talk with Mark, and I'm really excited to bring back a guest who was on, I don't know, 6 months ago, maybe a year now.
About a year, yeah.
Yeah, and by popular demand, Ken's back in the house with me. Ken Renner
by Mark's demand.
Yeah, by my demand, I should say. Ken Renner's in the house with us today, and Ken has two N's, by the way.
Yep.
Just make sure we understand that part. But
absolutely.
Ken is not only an expert at what he does in real estate, but I want to talk about your experience and welcome you back to the show because we have a lot to catch up on.
We sure do.
This has been a crazy couple of years, and I really want to get your feedback on what's going on and let people know what's going on so they can make informed decisions. That's the whole point of the show, is to help people make informed decisions around their real estate or other things they need around their home. So welcome, Ken Renner. Tell us about
appreciate it. Thank you, Mark. Yeah, we go way back, Mark. I think I met you in the early 2000s.
Mm-hmm.
We're doing some speaking, and I think we're helping first time home buyers back in the day. Yep. Because that's where the market was, kind of like where it's headed now.
Yep.
But I've been doing this now for 4 decades, 42 years. I got my first license in 1983.
You got me by 2 years, by the way.
I know.
This is my 40th year.
I'm just I got a little more gray hair.
You still got good hair.
I got a little more gray hair. You're catching up to you there. But yeah, so you've been 40 years, and we've been through it all. I mean, I've been through booms and busts in 4 different states, and really, it's just a matter of we're here to give people hope, and that there are solutions.
Absolutely.
And that's the whole thing, is that you want to work with somebody who's a professional, has been through one of these kinds of ups and downs, and knows how to navigate the market and talk about financing. And I used to own a mortgage company. You've known that for many years.
That's right. That's right.
And so
it's called River City, wasn't it?
It was River City Home Loan.
Yeah, I was always jealous about the name. I love the name. I should have taken it.
Yeah, well, it's you can have it now. Yeah, I was going to write a book, How to Get Out of the Mortgage Business.
There you go. Yeah.
So I've written some books and things like that, real estate books, and some goal setting. I even have a book on Christian goal setting. Which is,
that's awesome.
Yeah, called. So it's I like to share and like to see it, using my my years of experience to be able to see over the horizon. I think that's what people, why they gravitate to use me, is because when you have this many years like you do in the business, you not only have these networks of connections, we call it good old boys, right? That it takes years and years to develop. And so what's great about our vendors and people I've been working with, when I call them, including you, almost every time they pick up the phone, because they know there's going to be someone's going to be needing help on the other line.
That's
where transaction's going to happen. So I've been doing it a long time, over $500 million in sales.
Wow.
And a lot of that came thanks to the pandemic. So I did 120 million between 2020 and 2025.
Wow.
And that was almost 500 homes.
Wow.
So we were just selling a lot of new construction, and we're taking advantage of the interest rate atmosphere and everything. But we kind of really stopped buying in Austin during that crazy time, stopped really focusing on Austin. We didn't stop buying it, but we stopped focusing on it so much because between 2020 and 2022, it got so crazy. If you didn't
get prices in Austin,
prices in Austin from 2019 to 2022 probably went up. It went up about 80%, almost doubled.
That's crazy,
and that's 10
unprecedented. Yeah.
Well, it's 10 years of appreciation crunched into 2 years.
Right.
And so now we've had an adjustment down of about 20% from the very peak, which was June of 2022.
Yeah.
So it's down 20%. That's what you see in the news, and that's why we're here to give the good news.
Yeah. I want to back up just for a second.
Yeah,
because you mentioned something just a minute ago that's so important, because people don't realize how much experience matters. You know, and going, this is my 4th recession, if you will.
Yeah.
I went through one in the 80s, and I thought we'd never get out of it.
Yeah.
And then by 90, it started to turn. And then Austin has always done well over time. It's never been hurt.
Yeah.
But for you to come on and talk about your experience from that perspective, looking across the horizon,
right?
What could be possible here, in the next couple of years.
Yeah. Well, a lot of that depends on a lot of different factors.
Absolutely.
So I'll just finish what I was going to say about the 20% drop you see in the news.
Right.
Which
is a real thing.
It's a real thing.
We're not,
but it's 20% from almost 100%.
Yeah.
Right. So if you bought in 2019, 20, you had almost 100% value increase. And so you dropped 20%. So you're still up 80%.
That's right.
So it's great. Anybody who has their houses before 21 or 20, I'd be glad to talk to you because you got equity. Now the ones that bought in 22, I pray with them and I let them cry on my shoulder
Sure.
because they could have probably lost their down payment or a good portion of it. And,
or
you
they
know,
could be upside down.
and some of them are upside down. Yeah.
Which means
that you
explain
actually,
that.
when you owe more than the house is worth.
Right.
And that's what happened in the 07, 08.
08, 09.
That was a mortgage driven crisis, not what we're dealing with
That's
now.
right.
And so that was where prices dropped. And so we went through that, and everybody, the whole industry that was a tough time. Now that was an apocalypse. We're not in apocalypse now.
No, we're in a correction.
A
normal economic correction.
Right. But that still hurts, you know. And there apparently,
I'm feeling it.
I understand there's going to be somewhere between 5 and 6 million FHA loans that are going to be in default here pretty soon.
I didn't know that.
That's a stat that came out that kind of blew me away. But that's across the nation.
That's around the country. Sure.
Yeah. So Austin itself, you know, we have our median price is about flat.
Update us on the stats. You're a stat guy.
Yeah. Well, it's good,
which is really important.
Yeah, because it also feeds where the future is. That's what people come to me to see just a little bit over the horizon, because we like Wayne Gretzky. We're not going to go where the puck is. We're going to go where it's going. Right.
Sure.
So right now we're looking at the median price in Austin MSA is 449, about 450. And we talked about before the show, it made it almost to 600 at the peak, 570, I believe. And so that's only down like.
Explain what median is.
Median's half the homes are selling for more and half are selling for less. So we have was about down 1.6%. So it's basically flat from what it was last year. And so it hasn't gone down a whole lot, hasn't gone up. And that's probably, if everything remained the same, that's probably what would happen. But it also depends on inventory and what sellers end up doing, because right now they're flooding the market with properties for sale. You've got two different kinds of sellers: resellers, and you've got your builders. Builders are motivated sellers because they have to sell their product.
Right. And they have to keep building too.
And they have to keep building.
That's
now
what they do.
They will pull back.
Sure.
But they can't just turn the lights off.
That's right.
Because they'd
already purchased these properties.
They got land, they got labor,
land.
they've got all their crews, and and so a lot of them are just cutting their margins. And that's where we're seeing, I mean, we talked about it before the show, they had upwards of 22% margins. And now they're down to, maybe 13 or 14%. They're using that difference in margin to buy the interest rates down, get them down into the fives and the fours. They're slashing prices because they do have margin. And that's the thing. If you are a seller in this market, you need to be realize that. I tell my clients this: if you don't need to sell, it's probably not a good time to sell. So because those that are actually selling, they need to sell.
They need to get out.
Yeah. And
either relocated, or they're just, they lost their job or something.
And I got a new job, and we had those conversations. Okay, so if you've got to move, then you need to sell. So the thing is, you have to price it right. You have to stage it right. You have to talk about incentives. And these are why you need that experienced realtor that's been through these, can have these hard conversations like I'm having every day, that you don't want to chase the market down. Right. And
get ahead of the market.
Yeah, the stats are that back in December, January, we had 9,600 homes on the market, which isn't bad.
Just a few months ago.
Yes.
Oh wow.
But now we have 14,000.
Wow.
5,000
higher.
5,000 more homes on the market. So we're at 14,673 as of May.
And what does that cover? What area?
The 5 county.
The 5 county.
Yeah, Williamson County, Williams, Travis. Bastrop, Como. So that's a 5 county radius. So that is it's up 17.5% in inventory from the previous year. That's a big number. Now look at the closed sales. There was only 3,000 closed sales. So if they keep putting, then there was 5,700 new listings. So you have 2,027. You have 2,700 more listings than you have closed sales. Yeah. So for just the month.
Right.
So you're looking at 14,600, and that number will probably go up beyond 15, closer to 16,000. And that's where supply and demand is going to say that prices are going to have to adjust down. And so what I'm telling my clients is get ahead of that adjustment. Take it what's worth.
Take your medicine.
All we're saying really is, if you're going to list a property, list it 5% under the last comp.
Yeah. And
if you look at the average close to list price ratio is 94%.
Yeah.
So even at a good price, they're still taking another 5%. So if you have a $500,000 listing, you should be listing at 475 right now. And you probably may want to, and that's exactly what's happening on the Santa Rita Ranch
Where you live?
listing that I have. Yeah. A great property on Glen Arbor. And this property's absolutely amazing, unique house backing up to a lake. It's 2,400 square foot, 4-bedroom, 3-bath with a study, 3-car garage, Perry built home, custom house.
Yeah, yeah.
And we listed it for $495, got an offer right away, but it didn't pan out. And then now we're at $450.
Yeah.
And so this is unprecedented. You took 10% off, and we're still not seeing a contract, right?
Yeah.
So this is
another good reason around that is holding cost.
Yeah.
You maybe got a mortgage payment. If not even that, you're going to have tax insurance holding cost.
Yeah.
So there's expenses holding a property.
Yeah. And properties are
vacant.
And they're not meant to be vacant. They're meant to be, the dishwashers are meant to be run, So that's the thing. Then we have to have the conversation. Okay, you can leave it vacant, or do you want to rent it out? And you might have a 3% interest rate on that. And so that's the conversation I have, because I'm an investor.
Yeah.
And I've kept a bunch of my previous homes that I lived in, and I still have the one in Round Rock. And what it is, I teach my first time home buyers, this would be a great property for you to keep.
Yes.
Ask your father, your grandfather, if would you keep your first house?
Absolutely.
And I've never heard anybody, and usually it's one of those like, heck yeah, give me another one.
My first house was in 1990 for $90,000.
Yeah.
24 in Oak Hill, 2,400 square feet off Wheaton Ken.
Yeah.
It's worth more than that today.
Yeah.
I sold it.
Yeah, I know. So don't you wish you kept all those houses? So, and that's what really started a whole business plan for me, that I started working with first-time homebuyers. But then I found out those first-time homebuyer product, that the entry-level housing was great for investment. Yeah. So in the 90s, I started doing presentations at Renaissance Hotel, and you saw that doing a bunch of marketing. I would have first-time homebuyers on the first hour, and the second hour I would have investors. The same product, different buyer.
Yeah.
And
different persona.
Yeah, and then what happened in the late 90s, things slowed down here, and so I saw the market in California was way up here and accelerating, while we were kind of,
which is where you hail from, is California.
Yeah, I'm from California. Yeah. So I got roots there. I was born in San Mateo. So so I actually have more clients in California and Silicon Valley and Southern California and back east and Chicago and other cities than I do actually in our hometown. So because I go out there and visit with them and shake hands and kiss babies and make them feel good about, it's about 5-to-1 ratio. You can buy 5 houses for the price of 1. So, and that's very attractive. We've had many people that have sold their Bay Area property, or their one that they inherited or whatever, and bought 10 houses free and clear, tax deferred.
That's nice. That's a beautiful thing.
Yeah. So I had one guy who went from 3,600 income for his San Mateo house, and he went to, when he closed with me, it was a 13,600 gross income
4 times
for the same equity.
And that speaks to another reason people may want to hire you, because you have a larger network.
Yeah,
you're
that's
just not
the thing.
Networked in Central Texas.
Yes,
you're networked all over the country.
Yeah, and we that's another strategy of me going to California. There's so many relocations coming this way, as I wanted to be the go-to person, get in front of them while they're there. Yeah. Rather than wait for them to get here, because usually they get hooked up with somebody already by that time. So it's been very lucrative and enjoyable. Yeah. And lots of cultural buyers. So I've learned a lot. And and I really enjoy the differences in cultures, and that's what makes America great. Yeah, right? Is that they a lot of the different cultures think differently about real estate, and I like the way they think. They like real estate.
That's
yes,
right. That's right.
Yeah, and they hold on to it. A lot of
smart buyers.
Yeah, they're smart buyers. They're and
they do their homework.
Well, a lot of people came from other countries. They had to work. They had to be really kind of the most educated,
absolutely,
the most motivated,
disciplined,
and to be able to get here,
right?
Because
they won the lottery.
Yeah, they kind of do. That's kind of the so a lot of we joke is their parents always say, you're going to be an engineer or a doctor. There is no other choice.
Right. A or B. A or B.
Yeah.
A good friend of mine who has been in industry a long time as a software engineer went to work for Apple recently. Yeah. He said, Mark, now I go into the dining area or whatever, and probably 3 out of 4 are from different countries. Yeah. That have come here for the opportunity in the country.
It's absolutely amazing. It's great. And, for whether you love it or don't love it, it's here.
It's reality.
And it's reality. And we're one of the tech hubs, so.
Right.
And once again, our houses are 20% of the value of the houses in the Bay Area.
And that speaks to the economics of Austin. Central Texas is still pretty strong.
It's still
we
very
still
affordable.
have a strong job market.
Even though we have the highest prices median in the state, we're about where the median price is across the United States.
Yeah.
So it's all relative.
Yeah.
So yeah, we're seeing great. We still have some really amazing deals like that. Glen Arbor House went from 500 to 450.
10%
You
off.
can't even touch it. There's
No.
no new construction that beats it and everything like that. I hope somebody is listening, because that house is a great deal, and he's gonna turn around.
Well, speaking of listeners, let us know how to get a hold of
Oh
you.
yeah,
Let's
Ken
do
Renner,
that.
Ken Renner,
Maybe I
real
want to
estate
buy a
broker.
house today.
Yeah, absolutely. Yeah, give me a call. Prayer is part of our strategy.
Amen.
So yeah, it's Ken Renner, KENNRENNER, and it's my email's Ken, KENN, at my website, buyaustin.com. So Ken at buyaustin.com.
Great website.
I got that in 1995.
Wow.
Yeah.
Before websites were even around.
Yeah.
That was
It's
a
like,
brand new thing.
Yeah.
Man.
Yeah. So yeah. So yeah, buyaustin.com and 512-423-5626. And we'd love to chat with you and, and discuss strategies, market, tax ramifications, implications,
Sure.
how to shelter your taxes, all that kind of stuff. So,
and you worked, speaking of that, you've worked with hundreds, if not thousands, of investors, and talk about a strategy where they can take money from one property and tax defer it to buy other properties.
So it's a 1031 tax deferred exchange. One of the biggest benefits of real estate is the tax benefits. And as you know, from home ownership,
sure.
But that one of the things you pitch to your home buyers is that, hey, this is going to be a tax deductible mortgage, right? But in real estate investing, there's all of it's deductible along with another thing called depreciation.
Yes.
So your depreciation really saves on taxes depending on what tax bracket you are in this. There's strategies on that. But also, if you're taking an appreciated property and you've got a lot of equity, if you sell it today, you're going to pay anywhere between 15 and 20% capital gains.
Mm-hmm.
Plus you also have to pay back some other things, depreciation, recapture, and things like that. So why, you bought this great property, and now you maybe went up to from 500 to $1 million. Now you got to spend $100,000 in taxes or whatever it is. And it's like, there's a way to defer that by taking that investment property and selling it and doing what's called a 1031 tax deferred exchange. Mm-hmm. And that's what we're seeing with a lot of our clients. They'll take that one property and in the case of Mr. Bill in California, he took his one property, 1031'd it, and exchanged it into 9 properties here
in Austin area,
in Temple Belt and then different areas. So, and so that's a way to defer taxes and not even pay it. And eventually, actually, when you give it to your kids, they get what's called a stepped up basis. So, you say you can't avoid death or taxes. Actually, you can.
You can. Well, you can't death.
Well,
taxes.
Everlasting life. So,
different conversation.
But you can actually defer the taxes until the point where when your kids inherit the property as a stepped up basis. I'm not a CPA, and so here's my disclaimer. I'm not leaving legal or tax advice. If you want to know, call me and I'll connect you with my CPA. He has 2 PhDs. He's a pretty smart guy.
Good. Now let's speak of economics. Let's go back to some of the basics about what drives markets. And in our case, I think in real estate, it's going to be first time buyers.
Oh, what starts? Okay, we're talking about the cycles.
The cycles of business.
Of
real estate.
Real estate is that's what's nice about being able to predict the market. And not really. It's just you study the cycles. History repeats, right? So you always have it's common. You have your what we just went through is an expansion cycle. Then you have this doldrum,
which is a long cycle.
Our
last expansion.
Well, it actually was. It was from 2012 to 2022.
About 10 years.
10 years.
Usually around 7 or 8
Usually
years.
It's just 7. Yeah, it's just 7 to 10 years. But then you had another 10 years worth of appreciation in 2020. So you really had it was now you're seeing an adjustment. If you look at the chart, it actually, if you watch the normal price increases, which is great, healthy market for Austin, and all of a sudden you had this big spike, but then it drops down a little bit. It's still on the same trajectory,
right?
So we're starting to see it to come like this.
You think?
Yeah, it's going to go like this, and then it's going to start going back up again. And that's just a common thing. But here's the steeper the climb, the deeper the fall.
Yeah.
So, now we're making national news as one of the biggest countries with the, biggest cities in the nation, the biggest drop, but we also had the biggest increase.
Yeah, for sure.
In history.
Or probably any place in the country.
Percentage wise. Yeah. So it's all studying, when to buy in the market right now. I would say, is it time to buy when prices are low, when people are giving their houses away, or is it time to buy when it's peaking out? It's about ready to drop. So right now is the time, as people are sitting on the sidelines, waiting. There's going to be opportunities, and their opportunities are happening right now.
Yeah.
And just a 1% drop in interest rates, Mark, it's all your fault. 1% drop, 1% drops all we remember last September.
Yeah, it
What
went
happened?
down. Yeah, for about a minute, it went down quite a bit. It
You
went,
showed me the chart.
Yeah, I had a 10-year Treasury chart up before we got on the show, and it went down. The 10-year Treasury is really where people need to look at.
10-year Treasury.
If they're looking at the trend of interest rates, it's mortgage-backed securities are usually based on the 10-year Treasury, not directly, but almost.
Yeah, it's very easy to follow. In fact, we follow on a daily basis. In the mortgage industry.
Absolutely. We fell below 4% last September, maybe 3.8% on the 10-year, and mortgage rates came down below 6%. And for about a week, we were really busy.
Every applications were coming. People were out. Model homes were filled with people.
They
open
hear that
houses.
And they're on it like that.
Yeah, because there's they hear that there's good prices, which there are, and then all of a sudden you hear a good interest rate. So that's going to change. That's going to really help fuel
psychologically,
the market.
And economically.
Yeah,
I mean, let's face it.
Yeah, and so the new administration very much looking for the benefits of real estate ownership, and so that's what that all of the things that Trump put back in 2017. He's trying to get them renewed for 20 because a lot of them were expiring. These tax cuts for real estate, so it's very much a real estate friendly administration that we have.
That's good.
And and because we need it. Guess what? We're still 4 million homes short on that for what's actually needed in the market. We're actually nationwide.
I didn't know that.
4 million houses.
4 million houses.
That we don't. So the population keeps growing. The people are now. Our kids are starting to have kids. They're looking for their home. They want to set up their nest. They don't want to continue renting. Now we're seeing a lot of build to rent where people are much opt to rent over, which is another trend. But
another market,
opt to rent over buying. But a lot of people want to settle in. They don't want to be a renter.
Right.
So now that's
I was mentioning before. My youngest son. I've got 3 boys and 2 of them own properties. My youngest son's 32. He's well educated. He's a CPA.
Yeah.
And he's been renting. He's on the sideline.
Yeah.
But I guarantee when the market shifts as far as interest rates, he's going to take advantage of it.
Yeah. Yeah. Well, we're also telling people that live in higher appreciated markets like Bay Area or Southern California where they can't afford. They can rent for the $3,000 a month, but if they bought that same property, it'd be $12,000 a month in a mortgage payment.
Absolutely.
So take the difference and invest it in real estate there where it's going to appreciate.
Right.
Yeah, including our places here in Austin. Be a good time to buy, but numbers still are a little tough on making the numbers work for rent wise because rents are down a bit. But in our submarkets, doing great. Our submarkets, which would be Temple, Belton, these are 50-mile radius.
About the submarkets, people don't really understand how that works.
Well, I mean, 50 miles south and 50 miles north on
Okay.
I-35, you've got great cities, New Braunfels and San Antonio. San Antonio is the 7th largest city in the nation, and its price is about 100,000 less than Austin on average. And we're buying
homes, up and down I-35, really.
Right.
From Waco possibly down to San Antonio.
Yeah. So we look at those good metros where they have their own economy that are not based on high tech and diversified and an attractive place where people want to live and jobs, all the stuff that why we invest. And those prices are literally 50% of the median price. We're buying homes. We just closed several of them under 200,000 for a 3-bedroom, 2-bath, 2-car garage, 1,450 square feet.
Where's that?
New Braunfels. And
wow.
Yeah.
Wow.
And then Temple Belton with the whole medical thing, that's always been a great place to invest in. And we're seeing great deals in there. So about mid 250, like 250s, 240s.
Yeah, very affordable.
Yeah. Very affordable. About half of what we are in Austin.
And one of the beauties of Central Texas, and I read a stat one time from Waco, which is where Baylor is, down to San Antonio, which has a lot of colleges through Austin, of course. There's 400,000 students in this corridor.
Yeah.
Who will be graduating someday and who want to stay in Central Texas, most likely.
Yeah.
Not always, certainly, but so there's always going to be buyers out there. We just have to wait until things turn around a little bit.
Yeah. So, and that's the thing. We have 17,000 realtors in Austin right now, and we have 14,000 listings, which is that's less than 1 per person per realtor.
And you have 12 of them.
Yeah, I got 12 of them. Well, that's good. The percentage really is interesting. It was a sad stat. I pray for my industry because it was, the realtors, 50% did not sell any real estate last year.
Right.
62% sold 1 or none. So that's not, you
ridiculous.
can't make a living.
No,
So
obviously.
that goes back to, you want to work with a 5%er. You're a 5%er. I'm a 5%.
Yeah.
5% of us are handling about 80% of the business.
Yeah, because we've been around for a long time.
Yeah.
40 years.
Yeah. And back in the day, a couple of years ago, you just put a sign in the yard or go open door, and,
Yeah.
all those models don't work anymore.
No.
And
you got to have a pro.
Yeah, it is. And you're basically paying pretty much the same, about the same spectrum on compensation.
Sure.
Then why not, you're a specialist. Do
Exactly.
you get, as a doctor, do you get paid more as a specialist?
Yes, you do. I went to my cardiologist yesterday.
Yeah.
He lives in a $4 million house in Westlake.
Yeah.
So
Yeah. You're putting his kids through college.
We only got a minute or so.
Okay.
Talk about your network, your BNI for Christians.
Okay, yeah, it's called Kingdom Entrepreneurs. We've had Kingdom Entrepreneurs, and it's a networking group for Christian business owners and salespeople, anybody or entrepreneurs that want to get into business. And we have a live luncheon every month. It's at the Vineyard Church, but it's it's multi-church. People come from all over.
Sure. I've attended many times.
Yeah, we've got between
group.
40 and 50 people. And we do it on the second Wednesday is the online meeting, which is a Zoom. It's great.
Like a Zoom call.
Yeah. And for about an hour, we really get to know each other. And then the in-person is on the fourth Wednesday of every month. And so that's where it's kind of we have a luncheon, or free lunch. We bring in a good speaker, some barbecue, and even some kind of homemade. Last time we had homemade stuff. Mm-hmm. So and then we listen to a good motivational speaker like Mark Hairston. And then also and then we network, just like a BNI. If you've been in a BNI where you actually exchange referrals, but it's more about getting to know each other and being in a safe environment where we can talk about our faith.
Yeah.
So
I love it.
Yeah. So I appreciate that. It's kingdomatx.com.
Kingdomatx.com.
Kingdomatx.
Yeah, highly recommend you check that out if you wanted to just let Ken know.
Mark, you're going to be our speaker next month, or the month after.
All right. Well, we are wrapping it up.